Good evening, Jesse, and thanks very much for joining Blue Notes here in Canberra. You're speaking tomorrow on a panel about China and Australia trade relations, and indeed ANZ's just co-sponsored a report on Chinese investment in Australia. It can be quite a sensitive, a controversial topic, particularly in regard to investment in property and real estate. But can you talk us through the benefits from investment in Australia?
Thanks, Andrew. And the key benefits, I put it in simple words, that could be around productivity. Productivity drives economic growth. If you look at Australians' past economic growth record, since 1990s, it's divided into three stages. The first stage, that from 1990 to 2005, at that stage, the economy is driven by the surge of the productivity, and that productivity was attributed to a range of economic reforms implemented by Australian government. And the second stage moved to the mining boom stage. At that time, the Australian economic growth relies more on good fortune, given the natural ownership of the natural resources assets and the booming price of the commodity. So productivity was not paid much attention to. When it goes to the third stage, that is the post-mining boom stage, that Australia come back to original needs for the growth of the productivity, and Chinese investment can give the benefits about the productivity. That could include a lot of factors, including the business expansion and including the management skills, expertise sharing, and it can include global connection, especially the access to China market. And also it can increase the employment and the salary for the national citizens, etc.
Historically, the Australian economy has been built on investment, on foreign investment, but how much foreign investment does Australia need today, and how much needs to come from China?
Well, actually the report, gave a very technical and methodology around such kind of figures. And we have a general conclusion that Australia needs to spend 20% of the GDP into the investment. Chinese investment in Australia currently is quite small, it's less than 3%. But it's because it's fast growing, so we think it's very important in the future.
We're familiar with the very key role that Chinese investment played in the resource investments boom of the early part of this century. Where do you see that Chinese investment developing as we move into the years ahead?
Yeah, actually that's a very interesting topic, and we always talk about this, about the transition for Chinese investment into Australia. We all know that it started from the mining resource sector, and currently it's shifted away from mining sector to the more value-added products and services industries, such as agriculture, tourism, education, and property.
The report that's been launched today refers to some key case studies. How do you see the Chinese involvement in those case studies playing out?
Yeah, I think that the three case studies, is the bright spots of the whole report, and it selects the three very typical industries that Chinese investment is quite popular in that sectors, that is agriculture, tourism, and also the healthcare. So specifically speaking, if you talk about the agriculture business, the Chinese investment can bring the capital to expand the business output, and it will increase economy scale and lower the cost so that it can make the products competitive in the market. And for the tourism market, it is also a very interesting topic, because tourism, Chinese have the know-how and they have the knowledge about the Chinese consumers and can help attract Chinese visitors into Australian markets. And also, if you talk about the healthcare industry, it will be more around connection, to Chinese consumption market, because it will, help the brands build up awareness in China and also meet the demand from Chinese consumers. All of this, the benefits we can prove from such kind of past experiences.
As we mentioned, Australia has had waves and waves of foreign investment through its 200-odd years of history. But how does the Chinese investment wave play out differently to, say, the US wave, UK, European, and Japan more recently?
Yeah, I think that's a good question. The investment from UK and United States are quite mature and sophisticated because they enter into Australian market in a very early stage. And Japan could be a very good peer to compare with, because a lot of people are arguing that Chinese investment is following the track of Japanese investment in Australia, because they both start from the mining service industries. But I partially agree with that, but the difference will be, after the mining industry investment, there could be a lot of difference between Chinese, Japanese. And Japanese companies, investments will still focus on the manufacturing factors because that is a core advantage of the Japan, this nation. So that will include the auto and including the electronics, but Chinese investment is quite different. They will just diversify industries, including real estate, agri, tourism, education, etc.
Do you think there needs to be policy or regulatory change to encourage Chinese investment and indeed to manage public perception of it?
Yeah, I think so. Australian government has already done a great job in the past years. And everyone knows about chapter. This is really a landmark agreement that defines the economic, political, and historical relationship between the two nations. But every relationship cannot be existing without any problem. That is also the similar case for the investment relationship between the two nations. In Australia, there could be unease and concern about Chinese investment into some sensitive sectors, such as agriculture, infrastructure, utilities. And in China, there's still some conception that, Chinese investment is disadvantaged by the Australian government because of the stricter criteria for the mergers and acquisitions. So such kind of things gives a room to improve the existing policy and the regulation further to attract Chinese investment.